It's good to have your company for the weekly this Friday, the 23rd of April. I'm Jessica Amir, a market analyst with Bell Direct. Well, what a week. The Aussie share market climbed the stairway to a brand new 13-month high on Monday and then took a few steps down midweek because volatility increased. Now, that said, the market's gauge of fear, the volatility index, is at a 14-month low. And this month, the ASX 200 is up about 4%, putting the market on pace for its best gain in 6 months. And this is for two key reasons. Firstly, vaccine rollouts are quickening. Aussies over 50 will be able to get the AstraZeneca jab from the 3rd of May at respiratory clinics and from the 17th of May at GPs. And secondly, there's hope US quarterly earnings will grow at its quickest pace in 10 years. And in terms of the ASX sector moves this week, the best gains were seen in the 2020 ugly ducklings, healthcare and airlines, known as industrials. But the most significant turn of pace was the energy sector, copying its biggest fall in 13 weeks because the oil price fell 3%. Plus, we also saw selling mount in Whitehaven Coal WHC after 6 brokers downgraded WHC's outlook and price target. Now moving to stocks on the leaderboard, Canadian iron ore company Champion Iron CIA was one of the best performers. It was the best, in fact, up Monday to Thursday, up 8% to an all-time high of $6.80. Now CIA sells high-grade iron ore concentrate and announced its listing in the US on the OTC-QX, where 11,000 global securities trade. Now, this will basically provide extra liquidity for Champion Iron because it will keep its ASX and Canadian listings. Now, CIA shares are in a 4-week uptrend from a technical perspective and breaking out. Now, Macquarie rates CIA as a buy, expecting the iron ore company to triple production by 2026. Moving to the largest 500 stocks, Freelancer shares really stole the show. They lifted 29% Monday to Thursday to 86 cents. Now, this is the world's biggest freelancing marketplace. They reported their website users grew 106% to 51 million. Now, FLN reported record revenue and cash receipts in the quarter too, and investors really like that. FLN also recently listed in the US on the OTC-QX to broaden its US investor base. And FLN shares, it's worth noting that they've continued their almost 7-week uptrend and are in a technical bullish breakout too, so they're worth watching. Moving to considerations for next week, clean energy stocks and securities will be in focus because 40 of the world leaders wrap up that 2-day climate summit on Friday in the US time. Now, US President Joe Biden has already come out pledging to slash greenhouse emissions by 50% by 2030. Now, that target doubles Obama's target of cutting emissions by 26%. And what's more interesting is the US is not even halfway toward that target. Simply, this means there's more upside in stocks and securities focused on decarbonisation. With that in mind, if you look at the best performing ETFs this week on the ASX, it tells you a bit of a story. A Palladium exchange traded product, ticker code ETP MPD, was the best performer, up 5%. Now, this ETP invests in physical palladium, and it's benefited because the palladium price soared to a new all-time high this week after already gaining 10% so far this month. So something to note is palladium demand is really not slowing down. 80% of the commodity is used to go into car and truck exhaust systems to help turn pollutants into less harmful carbon dioxide and water vapor, all to effectively reduce emissions. So with that in mind, palladium may be well placed in investment portfolios. Now, beyond ETFs, there are several palladium stocks on the ASX to consider. They include Chalice Mining, CHN, which dubbed its Julimar mine in Perth as Australia's first major palladium discovery. You could also look at DevEx Resources, DEV, which is exploring in the Dillamah complex where Chalice Mining discovered palladium and nickel. And it's worth noting both Chalice Mining and DevEx are in technical breakouts and uptrends, suggesting they could move further north. While a third company to consider that's mining for palladium in New South Wales is Impact Minerals, IPT. And another approach when looking at climate-friendly investments is to consider companies focused on becoming carbon neutral. Fortescue Metals FMG is committed to being fully green in 9 years, planning to become one of the world's biggest producers of green hydrogen, and will also move its iron ore business to run off renewables, meaning FMG will convert its iron ore to iron without using coal. From a technical perspective, FMG shares formed an almost 5-week uptrend, reflecting this pivot to becoming carbon neutral. And FMG shares are also on the up because the iron ore price rebounded to that 9.5-year high, supported by Chinese demand. And if you looked at the most traded stocks and securities across Bell Direct this week, you'd see FMG is at the top of the list as the most traded security. Now, Credit Suisse, Macquarie and JP Morgan all think FMG is a buy and its shares will run further because the China output cuts were overblown. So there's plenty to consider for your investment portfolio for the next week and ahead. And that's the Weekly. I'm Jessica Amir with Bell Direct. From all of us here, have a happy and safe weekend.